stocks. What if I told you that 5 stocks, most of them trading under $7 right now, are sitting on catalysts so big that the next earnings season could literally rewrite their entire market cap? We're talking a gold miner restarting production, the cheapest energy play on the Nasdaq, growing their revenues 3,000% this year, and even an undiscovered robotics company. Most of these stocks are down 40, 50, even 70% from their highs, but the catalyst hitting in the next 90 days could flip everything. The first stock on this list is called Prairie Operating. This is an independent oil and gas company. Think of it as a company that finds oil and gas in the ground, pulls it out, and sells it, while doing this in one of the best oil producing regions in America, the Denver-Julesburg Basin. Last year, props revenue skyrocketed from under $8 million to over $240 million. For 2026, the company has plans for approximately 40 new wells. Management has set a bold target to nearly double their net income this year. When a company tells the market exactly how much more profit they expect to make, it shows a high level of confidence in their current assets. The company's oil and gas assets are worth over 10 times what the entire company is priced at on the stock market. Another bullish signal is that recently insiders bought over $4 million worth of stocks. This is showing high confidence in the valuation disconnect. Prop recently moved to the Nasdaq, which is like moving from the minor leagues to the majors. This puts the stock on the radar of big institutional investors and index funds. The forward PE ratio is just 2.16 times. Most oil and gas companies trade at 8 to 12 times. This is deeply cheap. The price to sales ratio is just 0.25. For investors with patience and a stomach for small cap risk, this could be one of the most undervalued energy plays on the entire Nasdaq. Next up on the list, we got i-80 Gold. They are a gold mining company focused entirely on Nevada, the single best place in the world to mine gold. Nevada is known for its miner-friendly laws, clear regulations, and world-class gold deposits. They control more than 250 square kilometers of gold-rich land in Nevada, a massive portfolio of projects. Their plan is to go from producing about 25,000 ounces per year today to a target of 600,000 ounces per year by the early 2030s. That's a 24 times increase in production. Franco-Nevada, one of the most respected gold royalty companies in the world, agreed to a $250 million royalty financing deal to fund their Nevada development plan. When one of the smartest, most experienced companies in the gold industry writes a $250 million check to back you, that's a huge signal. They now have the money to execute their plan. No more guessing about funding. CEO Richard Young personally bought a large chunk of company shares in late March 2026, a move that sent the stock up 9% in a single day. When the CEO buys shares with his own money, it's one of the strongest signals possible. He believes the stock is going higher. The average analyst price target for IAUX is $2.9. I'm forecasting the stock has the potential to hit $10 by the end of 2028, which is a 500% increase from current levels. But remember, that's only if they execute. But before we move on, smash that like button if this is helpful, and subscribe only if you want more stock research and updates. Next on the list, we got the stock T1 Energy. They are one of the leading solar manufacturing companies in the United States, with a complementary solar and battery storage strategy. At T1 Energy's Dallas factory, humans and robots work together to produce solar panels at a rate of up to 5 gigawatts per year. This is not a concept company. The factory exists, is running, and is scaling. The company has Section 45X production tax credits. Think of it as the government paying T1 for every solar panel they make. With tariffs on Chinese solar panels rising, T1 is one of the very few companies that can supply American-made panels at scale. The demand is not slowing down. AI data centers, electric vehicles, and factories all need massive amounts of electricity. All 5 analysts covering T1 Energy recommend buying the stock with an average price target of $8.90. And in my Mr. Invest sheet, I'm forecasting that the stock has the potential to hit $30, which is a 450% increase from recent prices. So make sure to put this one on your watch list. Next up on the list, we got the stock POET. POET makes the plumbing that moves data at lightning speed inside AI data centers. Think of it as the ultra-fast optical highways that connect AI chips to each other. Their products are lower cost, consume less power than comparable products, are smaller in size, and are readily scalable to high production volumes. Strategic partnerships with Foxconn, Luxshare, and Mitsubishi Electric validate POET's technology and open direct channels to hyperscale data centers. POET and Quantum Computing Inc. are co-developing an engine that will provide industry-leading data transfer speeds, meeting the massive demand of AI systems networks. Think about it this way. When companies like Foxconn and Mitsubishi Electric sign deals with you, they've done their homework. They don't partner with companies whose technology doesn't work. POET raised over $225 million during Q4 2025 and added $150 million in January 2026, strengthening its balance sheet and improving its ability to scale operations. Revenue is growing fast. I'm forecasting they will put up these revenue numbers for the coming year, and with a positive EPS of $0.3 in 2028, it shows that the stock could surge 100% within 3 years. A decent return, but one of lowest potential returns out of this list. So my recommendation is to put this one on your watch list and buy on a major dip. Next up on the list we got the stock KITT. Nauticus Robotics is basically building underwater drones. Autonomous robots that can dive deep into the ocean and do jobs that normally require expensive ships, crews, and traditional equipment. Their flagship product is called Aquanaut. Think of it as a self-driving submarine that can inspect oil pipelines, offshore wind turbines, and underwater infrastructure without a human controlling it. They also have tool KITT, their AI-powered software that can be installed on other companies' robots too, meaning they're not just selling hardware, they're building a software business as well. The Aquanaut vehicle has been successfully tested at depths of 2,300 meters, proving it's ready for serious deep water missions. And unlike older underwater vehicles that simply go in straight lines, Aquanaut can stop, hover, orbit objects, gather 3D imagery, and interact with subsea infrastructure. Their toolkit software has already been successfully deployed on other companies' robots, enabling better navigation, station keeping, and inspection quality. This means even competitors' equipment can become a revenue source. Nauticus signed a strategic investment agreement worth up to $50 million with Master Investment Group to establish its first international manufacturing hub in the United Arab Emirates. This is not just a commercial product, it has serious military interest. They are trading at the price to sales ratio of 9.5, and they are forecasting that their revenues will increase by 54% and their EPS by 23%. The stock is down 60% in the last 3 months. But to be fair, there is a reason for this. They burned $40 million in 2025 and are recently facing risks of getting delisted from the Nasdaq. So do note that this stock got the highest risk out of the 5 stocks in this video. Now listen, none of this is financial advice. These are penny stocks, and penny stocks are volatile. Do your own due diligence, size your positions responsibly, and never bet more than you can afford to lose. But if even 2 or 3 of these hit their catalyst, the math on a small cap portfolio gets really interesting. If this video saved you hours of research, hit that like button, subscribe so you don't miss next week's list, and if you want to go deeper, join the Discord, because inside you get access to the Mr. Invest sheet, where I break down every single one of these names with full 3 to 5 year upside models, catalyst calendars, and target price scenarios.